The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. This is in fact the Tiger Technicians Hour, and I had a little problem. I'm doing this remotely. Everything was working great, but I just could not get the camera up. Let's see if it's working now. Whoops. Sorry, desktop is offline. Wow, I hope I didn't do something wrong there, because then I can't get those charts. All right, well, you know what? In the meantime, I will do it a different way. And as I'm doing this, let me just run through all the different aspects that I'm looking at. There was a sell signal in the Dow, and I'm about to, let's see, sorry, I must apologize to my wonderful technician there, engineer L, but here we go. So I'm going to be putting up the charts as I move along. They aren't right now, they aren't there, but I'm going to go through this very slowly so I don't make any mistakes. As I'm doing this, I'm going to be talking about, let me see if I can find it, TFNN. I'll talk this out loud because it's very important I get it right. I had it perfect. Let's see if I can get it now. Yes, I've got it. Okay, good. So I'm working on that one, and in the meantime, so let me just sign in here. Okay, so I have, oops. There you go. Okay. Do I have the charts? Yes, the charts. I won't do that. Going to go there. Just give me 1 second, and it's not a second, but I'm loading the charts. I don't want to talk at the same time because I'm liable to make a mistake. Let me just get them up. They'll be up in a moment. And so, sell signal in the Dow, sell signal in the S&P. The Qs came in late. We got a sell signal to sell mode in all of them. Got that very sharp sell-off intraday yesterday, and then an acceleration to the downside. Most importantly, I was looking at the IBB, which is the one of the last of the fabulous sectors to kick in. And what did that do? That literally had a waterfall cascade yesterday to the low of the day, and this morning continued down, because there's some really bad news out there in certain sectors. So a couple of little things that I want to talk about. One is, within the context of what we're looking at right now, I'd spoken quite concisely and quite often that about a headline. You've got to have headline news, and it's got to be negative. And at a certain point, it goes from every week to a couple of times a week, to maybe every day, and then almost every hour. And that, in fact, is pertaining to what we're looking at right now. We're in a situation where my charts are actually coming back very nicely. That wasn't the issue. The issue was I had to refresh because I could not get the Tiger, the camera to work. So while I'm setting that up, I'll just keep talking. Most important about this whole aspect has been that when we are looking at the different indexes, it's all very well to look at the indexes, but absolutely the most important aspect is to be looking at sentiment. I don't regard the VIX index, the volatility index, as just a sentiment. It is, for me, the simplest thing. It is buying pressure and selling pressure. And that buying pressure and that selling pressure together are saying that as we look at there we go. Let me just get this. Okay, 1 second here. I'll be able to give you all the numbers. Now, I hope this camera works. Click, click, click. Oh, no. This is where I was before. I'm not sure why it's not working. Let me just give it a moment. Maybe it's going to take its time. If that doesn't work, then I can go to a different camera and work it a different way. But in the meantime, the Dow is down 36 points. The S&P is down 5. The Qs are down 35. You've got the dollar moving up quite nicely. But there are some stocks, especially in the biotech area, ARIA, ARIA, ARIA Technology, in fact, which is just getting pummeled. It was down huge when I last looked at it. And so the camera is on. I think the camera is on. Let me just ask my engineer. Can he see everything there? Is that on? Is it working? You never know with technology. We do our absolute best. It's coming. It's coming. Okay. So let me do this. If it's not there, he'll tell me that it's not there. But in the meantime, I can give you all the parameters that I need to look at. The Dow itself is down 35, as I said, is at 14,741. The comp index is down 35 at 3659. The S&P is only down 3 at 1652. I think we're real close to some kind of consolidation with a bit of a bounce, a kind of a reflex relief rally bounce. But the die is set, the die is cast, that we're going to make lower lows and lower highs, and that any rallies at this particular point, I have to consider, and I'll explain why in a moment, why they should be sold into. You've got gold down 21 because it's not, I thought it might be a harbinger of fear, a currency of fear, but it's not. You've got the dollar down 21 at 13.03, silver's down 53 at 21 cents. Now, this is very interesting. Crude oil, remember yesterday I had a call and I said, don't touch the crude oil. I don't like it. I think it's going down. Besides the fact that I think there's a glut, but technically I think it's going down. Well, it's down at 101.77, down $1.73. Bonds are up. They're down 8 cents. This is interesting. 133.05. You got the dollar up 34 cents at 80.48. Now let me just go back to my charts here and let me show you something very interesting. They included in the Dow 3 new stocks. One is Nike. And what do you think happened? Nike made a peak D, a gap. When I see this, I keep saying, oh, no, not a brand new Dow stock about to make a peak D. And what does it do? It makes a peak D at 75.25. NKE is the symbol, trading at 70.10, down 17 cents. I've got an alternate wave count in the weekly, which says if it's even now, I should say, but I'm going to give it the whole week to see what happens. If it takes out 68.64, the 9-period exponential moving average, that's going to be a right arm extension peak F, and it's a possible peak FC in the monthly chart. So this is something I have to take seriously. Remember, the other one was Goldman Sachs, GS. Here's Goldman. Daily peak D. It makes a 2-bar reversal, makes 170 round number high. I remember writing that in, but these charts seem to have slipped again. So 170 round number high. It's an not an all-time high, but around in the last buy mode. You've got a weekly that this particular chart formation that I'm looking at right here. This is the weekly in the middle. If you're looking at Tiger TV, this formation is something very important because it made a slightly higher high to go to an F, and that F at 170 round number high is just above the 169.69 previous high back in, what was it, late July, early August. Yes. So you've made 2 double cup formations. Remember, I don't like a double cup formation at the top. And what happened is it's a peak F, definitely a peak F. It's pulling back. Goldman Sachs looks like when this is all over, it could be testing 143 to 138. If it takes out 150, let me just see, 150, 149, 150 support in the next week, and a D in the monthly chart. So even the new stocks that they just added are vulnerable. Let's go to Lou in Nashua. Hi, Lou. How are you?
Fine. How are you?
Very well, thank you.
I'd like your take on crude oil. Thinking of getting January calls.
Okay. Have you already bought them, or are you still looking to buy?
Still looking.
Okay. Keep looking. I don't want you to be touching these. Remember we spoke about it? Oh, no, you did. You had left me a message, but I didn't. You weren't on the phone, but I'd done this yesterday. And what I said to what I was discussing is that I didn't like the look of crude oil at all. I thought that there was a chance it was making the H to an M pattern. And this is the H pattern right here. Folks, we're looking at, actually, if you don't mind, I'm looking at December because I've got it all notated. Let me just double check. What's the symbol for January? M?
I don't know.
Okay, I can't remember either. So I'm looking at December. That's the one at least I've got all notated. It's made a peak F in the weekly chart. And to me, a peak F in my CD introducing the Chapman Wave methodology, that is really important. I don't like to mess around at all when I see a peak F top in sixth highest peak from the lowest low bar, especially in the weekly chart. And in this particular instance, the low was back at 85.52, week of April the 19th in crude oil. It goes peak A, B, C, D, E. Looks like it's going to pull back by the price, holds the 9-period moving average. But if you look at the fast moving average of the MACD, look how beautiful it is. It goes all the way to a peak F top, sixth highest peak at 109.70 back in the week of the 30th of August, and now it's down and it's treating the 9-period moving average in the weekly as a resistance. Instead of walking it, it is being pummeled. It just can't get above it. So I'm going to say to you, I don't like crude. I do still like, and we've discussed this, natural gas. Even though natural gas should have been vulnerable to crude oil because it's in the commodity area. It's shown its total independence in leg C today, holding well. I think that natural gas over a period of a few months, I'm not sure what Andy Hefty, he's one of the experts at this, would be saying, because he likes to look at the long term. I think that when I look at the, now I know you spoke about crude oil. All I'm saying is I would not be buying crude oil. I don't think it's a trade at all. In fact, I would have been, yesterday I would have probably recommended that it's more a short than a long, but natural gas is different. I'm using my continuous contract. I like the continuous contract. It's saying to me that if natural gas can get into the fours in the next 3, 4, 5 weeks, it's going to go quite a bit higher. So that's my favorite. So I'm going to say to you, I would not touch the crude oil. I would prefer to be looking at natural gas.
What would the buy be in natural gas on a pullback?
I'm sorry, what?
The
buy would be on a pullback. Let me go back to the contract, the Z contract. That's the December contract. Probably you want to look out even more than that. It's trading at 3.856. I would nibble on a position right now, and I would add to that position at 3.787, somewhere around there. I actually preferably 3.80. And it has to hold 3.787, 3.75, that area. But I would start a little position here, and I'd add on it between, let's call it between 3.18 and 3.75. I'd add another small position. I'd add small. Why? Because I'd want to start adding when this thing breaks 3.90. I'd add again on the upside. So I hope that helps you, Lou.
All the time. Thank you.
Thank you so much for calling. Folks, Basil Chapman, Tiger Conditions Hour. We'll get more into the nitty-gritties now that I got my charts up. We'll be right back after these messages.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman. We're back. This is October the 9th, and it's my pleasure to be here Monday through Friday on market days. And even when I'm out of town, I do my absolute best to always be here. So I'm here. And look, isn't this incredible? You feel that the market is just, it's so nerve-wracking. But actually, from the 14,760 low of the 28th of August, you had 14 sessions to the upside to 15,709. On the 18th of September, you turn around and you come down. Today's the 14th session. And yesterday was an exact left side, right side price time match. 13, 14. Oh, that was 14. Sorry, today's the 15th day. Yesterday was the 14th day. It hit it exactly, the 14,760 level. It went to 14,773, 13 points. It missed it by in exactly the same time frame. So if you were a bear, you can imagine how the feeling was going up. You must have felt the same way as if you're a bull now and you're looking to the downside. If you were trading on the upside correctly and now you're trading on the downside correctly, then you say, ho-hum, that's the way it is. I'm trading the trend. What's the trend? Look at the fast-moving average of the MACD. When I got that sell signal confirmation underneath the 9 EMA, that to me was pertinent. It was absolutely imperative. Have a look at these things. This is the 5 quintiles that I look at in my daily that I sent to my subscribers. This is the 120-minute chart. It stayed in the channel. It's just about to test the low of the channel in trough, either brand new B or it's F, and you've got the VIX index going, and we still own some VIX index. Can you believe it or not? It's just unbelievable the amount of money that gets made on the upside when this thing really works. And this is now leg C in the 120-minute chart. Here we are looking at it. I don't have any alternate count. That's the way it is. And I had a fantastic indicator that said there should be some kind of an intraday rally of about 7 to 9 points. And from the low yesterday to the high today, there was, in fact, an overnight, the futures did rally that amount. Now we're looking at the chance that there could still be some kind of a late day relief rally. But most importantly, what we're looking at here is, let me just get back here to this particular chart, is that I was saying that that Goldman Sachs has made a peak F at 170 round number high. It's about to retest. It looks to me like at 153.21, it's going to test the 150.83 200 period exponential moving average, if not the 151.33 level real soon. But it will touch it at some point. Weekly chart's very negative, and monthly chart is still pretty darn good, but the 9-period moving average at about 150.40 is going to be key. So then what happens? They add Nike. Nike is trading right now down 14 cents at 70.13. Peak D in the daily, peak F/C, right arm extension possibility in the weekly. So if it goes under 68.54, that'll confirm for me it's an F. And I'm holding off on the weekly because monthly because the stochastic is still good. Weekly, stochastic and MACD are still good. And you've got the 200 period moving average way down at 29, and this is way above, so it's a little extended that way, but there's nothing technically yet incorrect except one little indicator saying, be careful, I'm about to turn down to give you a clue, a heads up that Nike could pull back. Isn't that interesting? So now let me do a couple of other things. Remember I spoke in great depth about the IBB, the NASDAQ iShares Biotech Sector ETF. We got the exact short in my opening call right at the high of it was a top tick, in fact, at 212.50 the week of the 19th of September. It pulled back beautifully. I did not get out in time. I thought that was the top because the MACD and stochastic were starting to fail, but the stochastic was still above 80%. So what happened? There was a fabulous rebound. That was a coda to a piece. If you know Beethoven's music, you know how I always talk about sometimes you think the piece is going to get a long piece, and then you think, okay, it's just about to end. This last movement is just about to end. And it goes bum bum instead of going bum bum bum. It goes bum bum pa da dee da. Goes off into another tune. You think, oh my God, I mean, my meat is going to be late. I'll never get there in time. And all of a sudden he goes bum bum bum, and he finishes it up. That little extension to the coda there that you thought, oh, is he restarting the piece? Was the top at 213.78, a peak F top in the Chapman wave, a cup formation, a failure formation. And we were lucky because there was a signal on the second that confirmed when we went short via 200% short index of the IBB. And look what's happened. It's plummeted in just 1, 2, 5 sessions from 212 area to today's low of 191. I'll be back straight after these messages.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We're back. Basil Chapman, Tiger Conditions Hour, and I'm not able to see that all that clearly. Let's see. Is the Dow? Let me just run this one here. So the Dow is down 17 now. I got a feeling that they're going to, this little phase that we had right now is a little coda on a very short term to the downside. Thought it would rally today. Many people thought this is a bounce with Yellen being nominated potentially, and failure, and all of a sudden goes to a lower low. I think, if anyone had really just swing trades at this particular point, I'd start taking some profits on those trades on the short side. Now let's just go back to what I was saying. I just wanted to show something. Whoops, the wrong one. Here we go. I had some questions about whether I would look at the Facebook and URI. We'll look at that in a moment. So I just want to finish this just to show you how this would work. The MACD and stochastic failed, so the price of the IBB has plummeted. It's at 193.20 right now, down 551. Hit a low of 190. What was it? 191.29. That is a huge move for this. Look at this on a weekly basis. Find me another move like this. Not ever. You'll never feel this is the biggest move it has had ever, ever, ever. Even bigger than in May of 2010 when we went from 92 to 70. That's 12 points. This, in fact, is from, what did I say it was? 213.74 down to 191. 213, well, already. Just that alone says that it isn't even finished yet. and that's the down move. So it is early. If you look at the different stocks there, if you look at say BIIB made a peak F top right at the top daily, peak F in the weekly. Now it could be a G, could have been recycling in the monthly. I'm gonna have to restudy this. I don't want to do it on the spur of the moment right now, but it could be a G/C or B. I'm not sure. So you've got to be careful in the biotechs. They're vulnerable now. They've had a spectacular move. Amgen, a whole bunch of them. The leaders, Amgen, peak G top at 117.91, 2-bar Chapman wave reversal, peak D in the weekly, and a G/C again in the and this one actually could be a G because of the MACD movement in Amgen. So you got to be careful with these. Now let's see Facebook. Now this is going to be interesting because Facebook made a peak D top at 51.63. What is a peak D top? Is when the price goes to 4 successively higher peaks. That's where you got to be somewhat careful. Now the most positive thing about Facebook is it's only a C or an F perhaps in the weekly, but the MACD and stochastic are really strong, and the monthly is only made. This is going to be a peak B if there's no new high this month. I don't think there will be. So let's call that a peak B. It says Facebook should still go higher over a period of the next 3 to 5 months. It should still make new higher highs. So you want to look to see where to re-enter if you have been in it, if you've taken profits, or where to enter if you've never been in it. So the other question was Yuri. The VIX index was the next question. The VIX index, now we own just a handful of shares left in the 200% long the VIX. You can imagine from the 33 area to today's high of, I don't know what the high is, but it's somewhere around the 46.5 area. That is, those are big moves. Now look at this. You're getting to an area of resistance. So that area of resistance is, all right, be a little careful. Actually, this is even better. Look at this beautiful chart here. Showed my subscribers this morning. 21.91 was the target on the upside. It went to 21.34, but it still has a couple of days to go because that left side, right side price time matches on the 15th of October. Is that the 15th? No, it's the 18th of October. So the XIV has gone below the left side low of 23. This hasn't gone to the resistance of 21.91 made in 24th, or was it? 24th of June, 21.91. So this is going to be really interesting watching it as it unfolds. Most importantly, look at the left side, right side price time match there. So we're looking at this, and I'm looking at this, at least in my subscribers on, we're saying it started its move. The weekly chart on Friday is going to be absolutely important to monitor. Why? Because it is breaking as of now, but it's midweek right now, midweek, 2.5 days to go. And that trend line is going to be really important. Let's go to our first caller. Second caller. We've got Brent in Martinez, California. Hi, Brent. How are you?
I'm doing great, Basil. How are you today?
Very well, thank you.
I'm calling about Stratasys.
Yes.
I would like to get along at some point. I know now's not the time, but just if you could give me some idea what you think a level of support would be.
Yes, I've followed these very closely. I'm going to say we missed going long. I think we went long a DDD once, and maybe we made a little bit or we lost a little bit. I don't remember offhand, but it was not successful, and I stepped aside and I said, wow, I'm not getting the timing right with this, so I'm going to just have to step aside. But I did get it as a potential short, never got it as a short because I didn't place it, but I said I think it is now highly vulnerable. And I mentioned, I don't know when it was, about 3 weeks ago, that it was starting to make the H pattern, which it's done. But folks, we're looking at SSYS is the compatriot, the one that moves not necessarily together, but kind of in the same direction. But it's the same category. It's invented patent fused deposition modeling, 3D price and prototyping, print and prototyping. So Stratasys Inc. I always say that if a company has a tough name to say out loud, that always gives me some skepticism as to its viability, but it shouldn't. A name is a name. So here we are. We're looking at A to B. Well, let me see. Yes, that's B to C. So B there. C and C minus. And that's what you get sometimes in this arch formation that I use in my CD introducing the Chapman methodology. That left side low today has been taken out, and that's the low of 91.95 on the 13th of September. You know what I'm going to do? I'm going to say I like this very much. I think looking out, I know that Dave White has spoken about these. He actually introduced it to us. He's our tech guru at TFNN, introduced it to us. I think it was DDD plus another one, XONE. Some time ago, I've been following these, the three of them, and I'm suspicious of this move. The last bounce, in fact, was the one I was suspicious of in SSYS, the one that went to 113.49, pullback, and then retested on the 3rd of September. It opened with 111 round number high open. Went to 112.83, just underneath the previous high, had a low of 108, and then it took it out. 108 is going to be a key metric when it starts to move back higher. I'm going to suggest holding off. If this thing trades at between 85 and a half, and 83 round number low that was made on the 11th, was it the 11th of August? The 7th of August. 83 round number low. Call me again on this one, and we'll see if that's going to be an entry point. My suspicion is that it's going to go lower, and that we will be looking at it round about the 81 to 79 area as a potential bounce first, and then to see if it's going to have a decent rally. But that's based on the daily chart. The weekly chart says, let me just move this away, the one in the middle here, is that the candle of the 9th of August, the weekly candle with that low of 83 is going to be really important, because the close below it sets up two levels of support. One is the low of the week of the 28th of June at 77.79, and the next one 74.54. I'm going to say hold off. I don't see anything technically in the daily or the weekly, and it's the monthly that says to me, looking out into maybe November, this could be a stock that can suddenly garner some real interest on the upside. But I'm gonna say, let's look at it again. Just remind me if we can get into that close to the 83 level, and let's see how it's holding up. It might be a nice trade for a bounce back from 83 to maybe 87 or even 91. Keeps making these arch formations. But right now, I'd say I wouldn't be touching it at this particular point. Hope that helps you, Brent.
It does. Thank you, Basil. At some point, you might want to look at Sears Holding. I think it had a round number high of 66. So.
Sears, I met with someone a little while back. Well, I always meet with him every few months. He's a good friend, and we just discuss things. Mostly we discuss because his thing is business, and he's an expert in the biotech area. And I kept saying to him, every time I've wanted to short Sears, or in my opening call, we have shorted it, it's managed to bounce. And I could never understand why, because the chart, the company's terrible, the stock looks terrible. And what he said is there is such a high short interest. And Malone, I can't remember the name of the guy who is the CEO, has a huge, he says, these guys have kept a very small amount of shares out in the public, and they are able to just control it. And I'm looking at it, and I'm saying, I'm with you. I was short the heck out of it right here. I don't know what this last rally was. It looks like a single leg A. It happened to go to B in the weekly. But I must tell you, this is one of the very few times that I respect the shorts, because I've seen it happen too many times. These guys, not that I respect the shorts, I respect the guys who have the insider track, because they know exactly what to do. So I'm going to say to you, on a short-term basis, if you want to short Sears, I'd wait for a little pop. It's at 60.50. SHLD is a symbol. If it can get to 61 3/4 to 62.50, I'd say, okay, but boy, it bounces back so strongly. I think there are others that don't have the same history of short squeezes. So it's one that I just now stay away from. I look at it and I say, as a company, I don't know where you think you're going. You're not going up. You're not getting better. You seem to be getting worse. But as a stock, you've held very well. So I'm going to suggest there are better ones to short. And in fact, I'd be looking at the ones that were fantastic. In the next big rebound, I'd be looking at LinkedIn. I love LinkedIn, but this looks to me like it's got more to go to the downside. It's at 218. It could drop to 198, so you get it at 226, 232 if you can. I mean, those are stocks that I think that are vulnerable right now. So I hope that helps you.
It does. Thank you very much, Basil. I really enjoy your newsletter every day. So.
Thank you so much, and I thank you so much for subscribing. I really appreciate that. Thank you, Ben. Have a great day.
All right. Bye-bye.
So, folks, let's look at something else. You remember the cues I was on right at the time that I said I think there's going to be a peak E-top, and I think everything about it, the MACD and the stochastic on the QQQ power shares, QQQ Trust Series, ETF. Well, it made that pop to the upside, and it went to 79.76 on the 2nd of October. Then it had that huge candle, but it wasn't a long-legged doji. It was a huge body of the candle. I have a completely different outlook on candles that have a tiny body and long legs, and it also depends on how long the legs are in relation to all the other candles, as opposed to a wide body candle. And in this particular instance, that wide body candle was saying to me, this is one time where I also look and I say, okay, where's the volume? That wide body and the volume said to me, this is a kind of a metric that I look at. This is really important. This is where I'm looking at a potential for further testing. And every time there's a pop-up, because it took out left side, right side price time edge so quickly, instead of extending as it should have, I'm looking at it and saying the big resistance is at 77.50. So I'm going to be watching that really closely. In the meantime, as I'm looking at the QQQ Trust Series, here's something else that's very important in my work. It's the rising wedge. And that rising wedge says to me that any pullback is going to be something that has to be considered in the light of, I just want to type something out. There you are. Okay. Just, I'm doing a bunch of juggling right now. It has to be put into the context of a rising wedge can form a cup formation. And how that cup formation unfolds, if it does, with support and rallies and either makes a higher high or then starts to fail, is going to tell me about the downside potential. In the meantime, downside potential, I've got trend lines that I use that are very clear. So they don't come into, I don't need them right now, even though we are short the Qs. I need to know them. And where does that? That comes in at 74, depends when, of course, at about 74 to 72. So we've got a break coming up. The Dow is, I can barely see it. Doesn't matter. The Qs are right now down 53, down 0.69%. I'll be right back after these messages for the final segment of the show.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on parts, plus a 64% on rest, at Hertz Global as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to The Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and let's see, we're going to go to our next caller. Let me just get this right. We've got Steve in Frankfurt, Germany. Hi Steve, how are you?
Not too bad. How are you, Basil?
I'm well, thank you. I've been waiting for one of my foreign country callers. We haven't had one for a little while, at least I haven't. So I'm thrilled to have you. You'd like to look at?
DIG. I have a position in DIG. I wasn't smart enough to get out of it yet. And I'm actually even considering flipping it to DUG, D-U-G, which is the inverse.
Yes.
And I'm wondering if I would be wise to wait a couple of days and see if it bounces, or if I should just go ahead and get out.
Okay, folks, we're looking at DIG is the symbol. It is the Ultra Oil and Gas ProShares ETF. I don't know if it's I think it's an ETF. It's not an ETN. It's an ETF. And hey, you got a great connection. My engineer also recommended, as just mentioned, great connection. That's wonderful. So this is tough for me to say, because I know that when I'm in a situation like this, I've learned over the years that, well, I don't have to tell you, your best loss is your first loss. So when you start to change your stop or anything like that, you become vulnerable to emotion because you've lost the perspective of technical analysis there. So I'm going to suggest two things. Don't have to do it right away. Day's still early. It could be a bounce or something like that. But this is a situation where would you get out? If you got out at the high of today, that's all the way up at 59. You're long, right?
Yes, I'm long, yes.
Okay. So you would get out at 59.43. If it bounces further, yesterday's high is up at 61 something. I mean, that is huge. I don't know what there is in the market to be able to take it to that height. So here's my thinking. You could do one of two things. I find to just get out of it, clear my head, and move on. I do that, and I do it very successfully. It took me a long time to do that. Otherwise, it just sits there, and to counteract it with going long the opposite, the DUG. Let me just quickly have a look at the D. I used to have these all notated. I don't have it notated now, which is an AB. It's in leg C. The DUG should go to at least a D with this kind of action.
Right.
So getting out now or getting out a little later, you're talking maybe 60 to 80 cents. I don't think that's going to make that much difference in your portfolio. But if you are wrong and the DIG, instead of bouncing today, closes towards the low and then gaps down tomorrow, that 80 cents is going to look like a gift when you're looking at now $1, whatever it is, 30 lower potentially tomorrow.
Right.
So my recommendation is, even though it's near a pretty good bounce, because when it retests that whole cluster level of supported 57.84 to 57, it could bounce. But I keep saying, where's it going to bounce to? It's just going to bounce to about where it is now, or maybe earlier in the day when it started. Here's my thinking. You could take off half, just clear, boom, gone, and keep the other half. The other thing is, I would just get out of it, because let's just say if you're down, say 10 or maybe even 12%, you've done this enough times, you'll be able to make up 12%. Even if it isn't immediately, you'll do it. But if it's 22% to 30%, that is psychologically very hard to do. So my recommendation, you want my opinion? I think it's going lower. It doesn't have to go lower right away, but I think it's at 58.59. I think it's going to 57.50. Even a chance of touching 56.08, the 200-period moving average at some point. I would take at least something off, and let's look at it again tomorrow and see how you can try to recover that. I hope that helps you, but you don't have to rush to do it. Think about how you want to do it. So that's my and thanks for calling, Steve. I really appreciate it.
Thank you, Basil. Appreciate it.
I hope that helped you. Thanks for being here, folks. Signing off, Larry Pesavento will take over. And as I say, we remain short in our positions. This market has a lot more to go, even with the bounce.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.